reversal on the US stock market since April. Nvidia post-earnings rally evaporated. Very good morning to all. I'm Kelvin here. Welcome back to today's Daily Dose of Market Insights. Today will be the Friday, the 21st of November 2025. Before we start our gist of our daily dose, let's have a quick look at the disclaimer first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is for general information purposes and is not investment advice. Past information is not representative of future results. All right, so today will be a very pivotal day given what has happened yesterday, especially over the US stock market. So let me share with you the movement and the price action has taken place yesterday and what are the potential causes of it in the US stock market. And I also covered on the FX market as well as the commodities market. So let's start with the US stock market first. So the US stock market, let me share with you this rather stunning price action reversal on a daily basis. So very quickly, just to make sure that the screen is there. All right. So all four major US stock indexes closed in the red. All right. The SPX down negative 1.56%. The Nasdaq down the most at negative 2.4%. The Dow Jones 0.8%, and the Russell 2000 down negative 1.82%. And if you look at the heat map of the S&P 500, give me a couple of seconds to open up the heat map chart. All right, we see a slew of deep red, almost on all the component stock of the S&P 500, 5 of them. And the one that is still has some pockets of green will be the consumer defensive. Walmart up 6.5%, given the fact that they improve their profit revenue guidance for the coming quarter. But Walmart itself and the consumer defensive or the consumer staples are only form a small weightage in the S&P 500. So with their outperformance, is not able to actually shell the heavily market cap high technology stocks that are centered on the AI driven team play. So what's stunning over here is that if you were to look at the price action on the S&P, let me share with you guys, which is here. This is the price action. So what I could see is that this is the price action of the S&P on the daily basis. So at the start, it actually rallied by 2%. 1.9%, 2%. So that actually came in within our expectation yesterday, because we know that during the after hour session, that means i.e. in early Asia session yesterday, Nvidia rallied by close to about 5% plus over here, because market reacted positively to the earnings result and the revenue guidance of Nvidia. So that kickstarted a rally. So it's only after 12 a.m. Singapore time on early Friday, the market starts to tumble, all right, and form this bearish, so-called this bearish engulfing candle at the end of the US session yesterday. And also yesterday's we call it very swift, high volatile movement is the most volatile trading day on the intraday basis on the US stock market using the S&P 500 as a benchmark since April this year. So we know that April, this one over here, this April, at this point in time, yeah, during this point in time over here, this was the so-called the post liberation day, we call it movement, post tariff liberation day movement. So if you will put it in a chart form over here, let me share you guys. I think Bloomberg has really done that for us. All right, so where is it? Yeah, it should be this one. Yeah, this is the movement. All right, so the SPX poses, let me, hopefully I can open up the screen. Oh, they can't expand. Oh my, let me expand it for you guys. So the S&P 500 posted its biggest reversal, that means two-way movement, since the April Liberation Day tariff turmoil over here in terms of the daily percent range, right? The high and the low. So yesterday is the biggest reversal since April this year, where it actually the reversal actually fluctuate close to about high and low around 10%. Right, over at that point in time. So yesterday, it actually pushed up close to 4% in terms of the high-low range over here. So a rather volatile session yesterday. So and also given the fact that the movement of the NVIDIA, the movement of the NVIDIA is pretty significant as well, and that potentially could cause what I call it technical deterioration in the US stock market yesterday. So what we could see over here is that the share price of NVIDIA, which is very important on how they move. Okay, so this is the share price of NVIDIA. Yes, managed to bounce off from that pivotal support level at 183.30, 177. Okay, let me expand it. Okay, so this is NVIDIA. Okay, let me put it up over here, the daily chart of NVIDIA. Okay, so you guys could see on the screen clearly. Okay, so this is the key medium-term pivotal support which I highlighted since Wednesday over here. Looking for it for the bounce. Yes, the bounce takes shape, but after the bounce at the start of the we call it official US opening session, that means i.e. At 10:30 p.m. Singapore time. Okay, let me share with you guys the push up. Okay, so it rallied up to 5%, right? That was a very strong intraday rally, 5%. So after this 5% intraday rally, market can't maintain and it reversed downward by another 5%, right? So the way it moved, so you look at over here, down by, sorry, not 5%, 8%. All right, so there's this huge two-way movement, and the negative price reaction or that swift reversal or bearish reversal can't clear past this upside trigger level at 19870, which is so very closely to the 20-day moving average. So this particular form of significant bearish reversal, despite the fact that it's still holding above this medium-term pivotal support at the lower limit of 177.7, the technical deterioration has take shape because of that swift price movement yesterday and its negative reaction of right below the upside trigger level at 198.7. All right, so that actually created a negative feedback loop into the entire US stock market. And most importantly over here is that, let me share with you in terms of the previous price movement, X post earnings, that means one day after the earnings, okay, almost one day, NVIDIA announces earnings every time after the close of the US session. So let us now take a look back in previous earnings results of NVIDIA. Right after they announce the earnings result, what will be the price reaction on the next day when US stock market reopen? Right, because they actually announced the earnings on Wednesday after the close of US session. Then we analyze what's the price action post earnings on the day after. Right, so let's look back in the past. All right, so this post earnings announcement is the worst in the last three earnings. Last two earnings is one of the not the worst, is the worst in the previous two earnings over here. And this price action that takes shape very similarly to the earnings that was announced on the 26th of February 2025. So that was early this year. So 26th February 2025, NVIDIA announced their fourth quarter earnings for 2024. Okay, get that clear because of that 3 months lag. So if you look at this portion over here, at the point in time, on 26th of February 2025, so that was their fourth quarter earnings for the prior. Earnings also surprised on the upside over here, both revenue upside by 5% and 3.23%. And if you look at the price action of NVIDIA at this point in time, it also rallied up at the start, then thereafter it shaped this bearish engulfing price action down by negative 8.5%. yes, this magnitude is much more worse, but the price action is very similar to what we saw yesterday. Right now, look back again over here. After this bearish engulfing pattern, NVIDIA price continues to decline until hitting the medium-term low of 7th of April at that point in time. So this decline also in line with macro factors, which is the so-called US White House aggressive tariffs stance towards the rest of the world. Okay, then coupled to that fall. So now the key story over here is that what other potential macro factor could impact further downside movement on NVIDIA, where previously it shaped this bearish engulfing pattern. In the past, it showed further weakness after in the next I would say how long does it last? So it's in April, February. So it lasted for around 1.5 months. So this was in late February, so roughly 1.5 months. All right. So now the key story over here is that yesterday macro factor that causes the negative feedback loop or reinforce it other than NVIDIA price action weakness was a slew of US Federal Reserve officials that come out with not so dovish public statement to support the third interest rate cut for this year, which is in the December meeting. So let me share with you guys over here. All right. So we see a slew of Federal Reserve officials speaking yesterday. Fed fractures deepen as bar signals inflation concern. All right. So Fed Governor Michael Barr said that U.S. Central Bank needs to proceed with caution in considering additional interest rate cuts due to inflation is still around 3%. And other several officers yesterday spoke as well. Hamek, Fed President Gooseby also signaled discomfort over inflation. So with this, three U.S. Federal Reserve officials speaking publicly yesterday, voicing out their opinion about kind of sticky inflation and giving what I call hints that the U.S. Federal Reserve should now pause after two interest rate cuts so far this year. So that actually led the CME Fed Watch 2 to be continues to price in a rather less dovish outcome on the 10th of December FOMC meeting. So if you look at it, it's still very low. So the Fed Funds Futures traders continues to price in only 35.6% chance or 36% chance that the Fed will do a 25 basis point cut on the 10th of December. So still recall that previously that highly anticipated third interest rate cut, the odds are very, very high. About a month ago, it was around 90%. And despite the fact that it starts to come down after U.S. Federal Reserve Fed Chair Powell mentioned in his previous press conference, stating that third interest rate cut this year in December doesn't come with certainty. So that has started to reduce the odds since then. But at that point in time, a week ago, it was only about 70-60% over here. All right. So right now it actually hovers at 35.6%, a rather low chance. So that also created a negative feedback loop into the US stock market over here, given that there will be less liquidity that's being pumped into the US financial system or the US financial market. Then what we could see over here is that in the FX market right now, so in the FX market, the dollar continues to push up over here. So this is the 5-day rolling performance of the US dollar against other major currency as of 21st of November as we are speaking. So the dollar continues to remain rather strong against the yen, against the Aussie, against the Swiss franc, and against the Kiwi. So strong against the Aussie because Aussie is being used as a risk on, risk off proxy as well. So given that sell off in the US stock market yesterday, the Aussie dollar tumbled against the US dollar. That means the US dollar rallied against the Aussie, and that also causes the dollar strength to have a direct correlation with the Kiwi dollar as well. But what's interesting over here is that the traditionally safe haven currency, the yen and the Swiss franc, didn't manage to recover against the dollar. So traditionally, when we see a risk-off environment, it seems to me that test. Oops, I think there is something, there's an error over here. 1 second. Mic test 1, 2, 3. Okay, give me a minute. It seems to me that the thing got cut off. Test 1, 2, 3. Okay, hopefully the system is back. Mic test 1, 2, 3. Yeah, I think it's back. All right. So just a while ago, I think there's a cutoff in the speaker or something like that. All right. So where was I? Yeah. So previously, most of the time, we see a significant sell-off in the US stock market, which yesterday, right? There's a big reversal. This big negative reversal in the US stock market tends to trigger off higher demand in safe haven currency. Example, the yen and the Swiss. So correlation play, the yen should actually and the Swiss should strengthen against the dollar, but this is not being seen in the FX market yesterday, where the dollar continues to trade firmly against the yen and against the Swiss franc over here, which is something very, very interesting right now. And also, on the other hand, gold price. So gold is being traditionally used as a safe haven, we call it asset as well. So gold yesterday didn't manage to rally as well. All right, so gold price continues to trade lackluster. And in fact, in today's Asia session, it continues to decline, down by negative 0.7%. All right, so there's a kind of a correlation breakdown at this point in time. All right, for this situation over here. And now let me share with you some very interesting we call it fundamentals that has been released in yesterday. All right, so let's take a look at the fundamentals data. All right, so fundamentals data yesterday, we see the delayed report of the September non-farm payroll data, which is a key labor market data that the Fed use to decide on their monetary policy stances. So yesterday, the non-farm payroll data came in way above expectation. Market is expecting additional jobs of 50K added for the September. Previously, in the month of August, it was negative 4K, but market came in above expectation at 119K. All right. But however, the unemployment rate ticked higher to 4.4%. So it's rather a mixed labor market data statement. And also this labor market data statement didn't cause the fall in the US stock market because the fall in the US stock market only comes at 12 a.m. Singapore time. So the release of the non-farm payroll data, a mixed one, continues to saw a rally in the US stock market at the first 2 hours or first 2 hour mark of the session. And if we were to go down all the way down to today's Asia session, so today's Asia session, we see the release of the inflation rate data over here. So inflation data for Japan continues to remain rather firm. So the core inflation rate is at 3% over here. And if you look at the one that BOJ tends to monitor will be the core rate that strip out both food and energy, actually rose 3.1%. All right, so if you look at the core rate in Japan, right, so if you go to the the 10-year trend over here, all right, so the okay, give me a minute. Why is it? Let me pull it in the graph. Yeah, so it continues to remain firmly above that long-term 2% target that BOJ kind of dictate. Previously, it hit August 2024. Ever since hitting at August 2024 at 2%, it continues its upward trend since that for close to about a year or so already. So that being said, that the inflation trend of Japan, the core rate, firmly remains above the long-term 2% target of the Bank of Japan. So that by right should support a weaker dollar yen, given the fact that that's moving in line with the Bank of Japan, and Bank of Japan has more importance to continue its gradual interest rate hike cycle, not cut cycle, but because of the political ball joint over here, that the current Japanese administration wants to boost GDP growth in Japan. So the current administration leadership advocate for a more accommodative monetary policy. So that kind of may potentially hold back Bank of Japan uh, interest rate hike decision and may starts to push the can down the road. So previously, market is expecting one interest rate hike in December, but that interest rate hike has been pushed forward until perhaps April next year, right? So that actually causes the dollar yen to actually further its support level at the 156 level. And what's interesting over here is that the current administration is also in dilemma. All right, so yes, they want Bank of Japan to be much more accommodative in their policy, but however, that being said, that will actually cause the yen to weaken. All right, so if the yen weaken too much due to speculation, there could be a risk that the purchasing power of Japanese consumer to buy overseas goods and potentially imported inflation may start to seep in into the Japanese economy. So that could actually reduce the, we call it the purchasing power of a Japanese consumer, which the current Japanese administration does not want that as well. So that being said, that over here is that there's this early morning news flow saying that Japan, which is the finance minister, actually issue a warning, a verbal a warning to the foreign exchange markets over sharp reserve movement in the yen because of that one-way bet due to the fact that I explained earlier, because the current administration wanted to have a more accommodative Bank of Japan. But that being said, that the administration also do not want to have a one-way steep rally in the dollar yen, that means the yen weaken dramatically, that causes Japanese consumer purchasing power to buy overseas goods diminish, and eventually will lead to a lack of consumer confidence and create a downward spiral in economic growth. So that is also being a dilemma in the current administration, and that causes the finance minister to come out early today Asia session to say that she's deeply concerned about the recent exchange move, which she briefly described as extremely one-sided and rapid over here. So the reason, because the yen is under pressure from the speculation that the new Prime Minister Takashi pro-stimulus policy might deter Bank of Japan from hiking its benchmark rate in the near term, which market has started to price in a very, very low chance that the Bank of Japan will hike in December, which is next month. Right, so later I'll share with you guys what are the key technical levels to watch out for the Bank of Japan for the dollar yen for today. All right, so that potentially covers the first segment of the daily dose. Now let me move on to the second segment of the daily dose over here, which is the intraday technical outlook chart on the starting with the FX market first. All right, over here. So let me expand my screen. All right, so where is it? Okay, so let's take a quick look at the dollar index. So the dollar index continues to prop inch higher over here. So this dollar index. So yesterday it continues to prop the upper limit of this medium term range resistance at 100.55 level, 100.55 level. All right, then we also managed to have a second consecutive day close above the 200-day moving average. All right, so now with that, let us now take a look at the euro dollar. Okay, so the euro dollar yesterday managed to do a bounce, but that bounce still remains below that 20-day moving average, which is also our short-term pivotal resistance that we have yesterday at 115.70. So are we still using 115.70 to maintain that intraday bearish bias on the euro dollar? First support level to watch will be 114.95, followed that by the all important swing low area of 5th of November at 114.75. Only a bullish breakout and an hourly close above 115.70 will invalidate the bearish bias of the euro dollar to see a squeeze up towards 116.15, maximum 116.50, 116.60, which confluence with the 50-day moving average, acting as a similar resistance zone as well at 116.50, 116.60. So that's for the euro dollar. Next up will be the sterling dollar. So the sterling dollar also play around with our resistance level yesterday at 130.95 over here. Went up before trading downwards at this point in time, but still trading below the 20-day moving average. So I will use an adjusted short-term pivotal resistance for today at 131.40, which confluence with the former minor swing low of 14th of November to 19th November, where it did a kind of a sideways movement before staging that bearish breakdown. And yesterday price action also reacted negatively right below the 131.40 level. We're also coming very close to the 20-day moving average as well. So using an adjusted short-term pivotal resistance level at 131.40, I would have a bearish bias on the sterling dollar for today. So the first support level to watch will be yesterday's European session low over here. So yesterday, not European session low, yesterday, yes, European session, Asia session low. Okay, yesterday Asia session low at 130.40, 130.40. So a breakdown below 130.40, 130.40 will expose the key intermediate support zone that consists of the 5th of November minor swing low and the one-time Fibo extension on the downside, taking into this ongoing corrective decline phase that is in play since 18th of September at 1.2990. And if you look at this 1.2990, it's also this minor congestion area here of 3rd of April and 4th of April this year. So to sum it up together, still maintain that bearish bias using adjusted pivotal resistance for today on the sterling dollar at 131.40, with the first intermediate support level coming in at yesterday's Asia session low 130.40, then thereafter followed by 130.15, 129.90. Only a bullish breakout and hourly close above 131.40 will invalidate the bearish bias on the sterling dollar to see a squeeze up towards 131.95/132.15 level, which is the minor swing high area of 14th of November and 17th of November. So that's for the sterling dollar. Next up will be the Asia Pacific currency. So the Aussie dollar, yes, in the first step, it managed to bounce, can't hit our first resistance level, 65.90, before collapsing again back below the 200-day moving average, and managed to find some support level on the intraday basis as we are speaking right now at the medium-term pivotal support, which is the expanding wedge range support that has been in place since 23rd of April 2025 low. So if you look at the daily chart of the Aussie dollar over here, so the daily chart of the Aussie dollar is still continuing to trade in this kind of expanding wedge range configuration over here. But recently, what we could see now is that it could be forming a potential head and shoulder formation. This is the head, this is the what we call it, the left shoulder, and this is the right shoulder, after failing to have a proper bullish breakout from this long-term circular descending trend line from 25th of February 2021 high. So this could be a potential head and shoulder formation. This is the head over here, this is the left shoulder, this is the right shoulder, and it's now testing the support of the right shoulder, which is the this level here, 64.40, 64.30. So that being said, that given the fact that this potential Aussie dollar move in line with the risk off situation in the US stock market, so I will not be so convinced that we may see a substantial bounce from for now, given the fact that later I'll share with you the technical chart of the US benchmark stock indices has deteriorated to the downside after yesterday's price movement, which I got to respect it. So with that, with this strong intercorrelation with the faith of the US stock market, where the Aussie dollar that has been exhibiting in the last 2 weeks, I would have a neutrality stance for today, despite the fact that it still managed to bounce off the medium-term pivotal resistance, medium-term pivotal support level at 64.40, 64.30, and also just now I shared with you the chart of the Aussie dollar is potentially forming a medium-term head and shoulder bearish reversal chart formation as well. So neutral between 64.67, 64.60, and 64.40, 64.30. However, a breakdown below 64.30 expose further weakness towards 61.15, 64 figure level. Okay, let me put it in writing. Hopefully, test. Give me a minute. Okay, one second. Give me a minute. Let's hope that the voice is back. Figure level. Okay, let me do a check again. Okay, this should be good. All right. So a breakdown below this key support level at 64.40, 64.30 will expose further short-term weakness on the Aussie dollar at 64.15, 64 figure level. All right. So given the fact that just now I share you guys that the Aussie dollar move in line with the movement of the US stock market, and given the fact that the US stock market has shaped a technical deterioration, I'll be not so convinced of a substantial bounce on the Aussie dollar for today. So maintain a neutrality zone between 64.60, 64.67, 64.67 and 64.40/64.30 for now. Okay. Now, next up will be the very interesting dollar yen. So like I say, the dollar yen right now has started to receive attention from the finance minister of Japan, stating there's a risk of a one-sided movement. All right, over here. So now it's actually fast approaching a key major resistance level at 158.35, 158.30 over here, which is this level here very clearly. Previously, it actually do a key congestion area here, hit on 10th of January this year before shipping that 4 month of decline until the low of 22nd of April this year. And also at that point in time, this level at the 158, 159 level actually attracted or triggered Bank of Japan intervention under the instruction of the finance ministry in Japan to actually sell the dollar by the yen, and it's now fast approaching this level at 158.35/80. So if you look at the chart, the intraday chart of the dollar yen, which I have yesterday. So yesterday I do have a pivotal support at 155.95 over here. So what we could see over here is that the RSI now has come close to a horizontal support level at around the 50 level mark. All right. So that being said, that over here is that there could be one more residual push up towards this major resistance level, which is 158 figure, 158.35, and followed by 158.80, which is also a Fibo extension cluster level as well, taken into the latest price action in the last 1.5 months. So what I do over here is that if I do the last impulsive minor upmove sequence from the low of this level here, the low of 14th of November, which was last Friday, all the way up to yesterday's high, using the 23.6, 0.23, the 23.6 Fibo retracement level, and also graphically the minor swing low of Asia session yesterday at 156.80. So I will have a rather tight short-term pivotal support level for now for better risk management at 156.80. Still maintain that bullish bias, but be cautious. So this could be the potential residual push up towards the 158.80, 158.35, maximum 158 figure level, 158.35, 158.80 level before there's a risk of this Bank of Japan intervention coming into FX market under the instruction of the Japanese finance ministry. So with that taking shape over here is that we got to be much more cautious once we trade this dollar yen at this point in time. So that being said, I have a rather tight short-term pivotal support level right now at 156.80. So for this residual push up, but however, after this residual push up take shape, and if we start to see a swift break down below 15680, then potentially the dollar yen could move down rather swiftly towards 159.95, 155.25, followed by 154.85, which confluence with the minor ascending trend line from the low of 29th of October, and also confluence with the 20-day moving average very closely as well at the which is the 154.85 level. All right, so that's for the FX market. Now let us move on to the major stock indices, which is very interesting right now. So for the major stock indices, let us start with the Hong Kong 33. So before we jump into the intraday chart of the Hong Kong 33, let's look at the longer term chart first. So this is the longer term chart of the Hong Kong 33. So initially we have a bullish bias on an intraday basis, looking for it to retest this major resistance level at 27,500. So why this level very important? This 27,500 level is actually the long-term circular descending trend line that has kept previous bulls in check for the Hong Kong 33, that's representing the Hang Seng Index, since its all-time high level that was printed in January 2018. So at that point in time, there's a lot of negative macro factors surrounding the Chinese economy that causes the Hong Kong 33 to trade in a major downtrend for the last, we call it 3 to 5 years. So right now, the longer term downtrend has started to shape a bullish bottoming formation. So the confirmation will come is upon the breaking out of the 27,500 level. So upon this level here, during the week of 10th of November, it hit an intraday high of 27,000. Where is it? Yeah, this level 27. Okay, yeah, 27,175, almost a retest of it, but can't break up and push down. And in today's this week, it start to shape a long body bearish candlestick as we approach a few more hours before the week ends for today. So now there could be a big risk that it may retrace down towards the lower limit of this major ascending channel that is still in place since January 2024. So what it means that right now the Hong Kong 33 could be shaping a potential multi-week corrective decline within its major uptrend phase that is still intact by looking at the way the price oscillate within this major ascending channel from the low of January 2024 over here at this point up. So next two key support level to watch will be at 24,185. Then the long-term, medium-term pivotal support will be this double bottom neckline resistance now turns into a pullback support level at 22,670 level. So the 24,185 also confluence with the rising 200-day moving average as well. So these are the two key support level to watch as the price action now potentially shipping that multi-week corrective decline sequence after yesterday's US session technical deterioration. All right, so with that, let us now go down to the intraday chart of the Hong Kong 33, which is the hourly chart. So the price action plummeted below. All right, so breaking below our short-term pivotal support level that we have yesterday, and also breaking below the minor ascending channel support that I previously drew from the low of 13th of October. So given the fact that it has really hit the alternative support level at 25,185, which is over here, at 25,180 level, and the RSI is at the oversold level. So potentially now there could be a minor bounce taking shape. So as long as this minor bounce didn't surpass this short-term pivotal resistance that I have at 25,535, I will flip to a bearish bias after this minor bounce to expose the next near-term support level at 24,920, maximum 24,710, which is the minor swing low area of 5th of August and 12th of August. All right, and 24,910 is the 10th of October 2025 swing low that is being induced by that Trump tariff tantrum at that point in time. Only bullish breakout above 25,535 would invalidate today's bearish bias view to see a squeeze up back again towards 25,760, maximum this week high at 26,045. So that's for the Hong Kong 33. And now moving on, next will be the Japan 225 representing the Nikkei 225. So for the Japan 225, it's very interesting. It's rather resilient. It didn't break below this week low have managed to held above the 50-day moving average as well, and also our medium-term pivotal support level that we highlighted yesterday, but it broke below our short-term pivotal support that we have, a very tight one. So during the start of the Asia session, it can't break above the resistance level, and thereafter in the US session, it's just tumbled downwards. So with that being said, over here is that it seems to us that this Japan 225 may start to trade in a sideways range configuration. I don't want to be so aggressive to be bullish right now, given the fact that the other major stock indices are not having enough elements to justify a bullish reversal. So with that, for the Japan 225, I will flip to a neutrality stance. So neutral between 50,250, which is yesterday's US session high, where it can break, and also the upper limit will be the 20-day moving average that is capping the bulls in check since last Friday, 14th of November, swing high where it can't surpass. So neutral between 50,250, 50,730, and the lower limit will be our medium-term pivotal support, where price action managed to survive right now at 48,450. All right, so that's for the Japan 225 representing the Nikkei 225. Onward next will be the Germany 30, which is the weakest major stock indices that we covered on a frequent basis. Why? Because price action have a bearish reaction of the 200-day moving average. So far, the US stock indices, the Japan 225 that's representing the Nikkei 225, and as well as the Hong Kong 33 that's representing the Hang Seng Index, all still managed to trade above their 200-day moving average. But the Germany 30 has staged a major bearish breakdown below the 200-day moving average, and it's also is ascending support trend line previously in dotted red from the low of 19th of June this year. So with that, yesterday we do have a bearish bias at the 23,450. Price action managed to challenge this 23,450 before shaping that bearish reversal in line with the US stock market bearish reversal as well. So that being said, it came down, hit our resistance level, hit our support level at 23,030. So with that, I will still maintain that bearish bias in any bounces that may take shape today. So first resistance level to watch will be 23,135. For pivotal resistance, I will tighten it downwards slightly lower to 23,300 level, which is this, if I do this one steep wave move down, the Fibo retracement, that consists of the golden ratio of 61.8%, and as well as the former minor swing low that the price action managed to bounce off from the start of the US session before collapsing downwards. All right, so now turns into a key pullback resistance level as well after it can't survive it during the US session gets underway. So neutral, I don't know, having that bearish bias in any bounces, maximum bounce allowable will be 23,300, short-term pivotal resistance level. Still maintain that bearish bias with the next near-term support level coming in at 22,780, followed by the 1.382 Fibo extension on this ongoing corrective decline sequence from the all-time high that has printed on 9th of October towards 22,650 in its maximum for today. So 22,650, graphically, if you look back in time, is also this former minor swing high area of 2nd of April and 30th of April, now broken up, now turns into a pullback support level. Only a bullish break up when hourly close above 23,300 will negate this bearish bias view to see a retest at 23,450, which is also the 200-day moving average, and as well as the critical pullback resistance of that former medium-term ascending triangle range support now turns into a pullback resistance level. Only a clearance above 23,450 will see a much more substantial mean reversion rebound coming into play towards 23,665, followed by 23,960 maximum, which confluence with the rising, the falling 20-day and the 50-day moving average. All right, so that's for the Germany 30. All right, onwards next will be the major stock indices, starting with the US Wall Street 30. So the US Wall Street 30, yesterday we have a bullish bias. Yeah, price action managed to bounce for the US Wall Street 30 at the start of the US session, hitting our first resistance level at 46,575. 46,740. Then thereafter, it can't maintain the momentum to hit the second resistance, and it collapsed all the way and broke below our short-term pivotal support that we have yesterday. So now it's potentially doing a retracement after this steep sell-off that is being seen at the 12 a.m. mark Singapore time yesterday, right over here, 12 a.m. mark. So with that, I do a FIBO retracement. So potentially the 61.8% golden ratio lines with this graphical resistance over here, where it managed to stage a swift push up during the start of the US session. Then after that, it can maintain that momentum. Notice that once it breaks down below this level, it starts to see a throughout sell off in the later part of the US session yesterday. So that being said, that this is a very important sentiment level, and it will be our pivotal resistance level as well, given that it confluence with the golden ratio of 61.8%. So using 46,355 as my short-term pivotal resistance level on the Dow Jones Industrial Average, which is the US Wall Street 30, flip to a bearish bias. So right now, potentially, we could start to see a start of a medium-term corrective decline sequence after what has happened yesterday, which I explained earlier at the start of today's daily dose. Next support level to watch out for will be at 45,485, maximum 45,190 for today, which is the minor swing low area of 14th of October, 17th of October, and the 13th of October. All right, only a bullish breakout and an hourly close above 46,355 will invalidate today's bearish bias view to see a squeeze up to retest 46,575, 46,740. A bullish breakout above it will potentially see yesterday movement as a fake bearish move to see a further push up towards 47,020. So that's for the Dow Jones Industrial Average, US Wall Street 30. Next up will be the SPX over here. So the SPX also plummeted. So yesterday it also managed to see a squeeze up over here, hitting our first resistance at 6,780 very closely, which is the 20-day moving average, before collapsing and broken below our short-term pivotal support level that we have yesterday at 6,590. And the way it moved, I would say it managed to hit the alternative support level at 6,540 before staging a minor bounce in today's Asia session. So 6,540 is that minor swing low of 17th of October. So given this rather steep movement, there could be a potential retracement or minor rebound scenario taking shape over here. So I do a retracement. So the FIBO retracement around the 50% lines with the 6,635 level, and also graphically this resistance level as well. So I'll be using 6,635 as my short-term pivotal resistance level to be bearish in any bounces over here for the SPX 500. So we'll flip to a bearish bias. Next support level to watch after 6,540 will be 6,500, followed by 6,475. So 6,500 is the 10th of December, 13th of October minus swing low. 6,475 is the 1.382 FIBO extension on the ongoing corrective decline that has taken shape since 30th of October, that is now being morphed into a medium-term corrective decline that may last further, and also graphically the congestion area of 8th of September. Right, only a bullish breakout and an hourly close above 6,635 will invalidate today's bearish bias view to see a squeeze up towards 6,675, followed by 6,720, which is the 50-day moving average. So that's for the SPX 500. Okay, lastly will be the Nasdaq 100 over here. So the Nasdaq 100 also tumbled. So yesterday almost hit our resistance level, 25,290, which we have a bullish bias. So but can't maintain that momentum and did the slide back and close below the 50-day moving average, and also broke below our pivotal support level as well. So that being said, this zone over here, so if we do a FIBO retracement, okay, that comes close to the 50% FIBO retracement. Okay, so this zone here, 25,390, 24,000, pardon me, a bit of tongue twisting, 24,390, 24,580. So this will be my short-term pivotal resistance zone. So I will have a bearish bias for now on the Nasdaq 100, given what has happened on NVIDIA price action as well. So any bounces that can't surpass above 24,580, I will have a bearish bias on the Nasdaq 100 for today. Right now, it's actually managed to pause at the 24,000 level, which was the alternative support that we have yesterday as well. And this 24,000 level is also confluence with the 10th of October minor swing low. So a breakdown below 24,000 level thereafter will expose the next minor support level at 23,745, maximum 23,490, 23,455 for today, which is the 1.382 FIBO extension of this ongoing corrective decline since 30th of October all-time high, and the 23,490, 23,455 also confluence with this minor congestion area of 1st of September and 4th of 5th of September. Only a bullish breakout above 24,580 that would negate today's bearish buyer's view to see a squeeze up again to retest the 50-day moving average. I think as the next intermediate resistance at 24,940, maximum 25,290, which is corresponding very close to the 20-day moving average as well. All right, so that's for the Nasdaq 100 and also sum up all the intraday technical outlook on the major stock indices. So let us now cover the commodities market. All right, starting with the gold XAU/USD. So for gold XAU/USD, we see price action continues to remain lackluster. So it continues to trade below the pivotal resistance that we have at 41.10, 41.33 level, and the hourly RSI continues to be kept by this parallel descending trend line over here. So with that, still maintain that bearish bias using 4110. So I speak where 4110, 4133, which is 4,110, 4,133. So I will have a rather short term or near term intermediate support level, which is yesterday's low at 4,038. So that will be my first support level to watch, or a downside trigger level, I will call it, given that it managed to 4,038. It managed to bounce off it since the Asia session. All right, it come since this was yesterday's Asia session low. All right, so this will be like a downside trigger level. A breakdown below 4,038 exposes the next near-term support level on the intraday basis at 3,980 for today. So that also corresponds with the rising 50-day moving average. Only a breakdown below 3,980 will see further weakness towards 3,895, 3,864, which is the minor swing low area of 28th of October this year. Only a bullish breakout above 4,133 will invalidate the bearish bias to see a squeeze up towards 4,155, 4,203 next. That's for gold XAU/USD, still maintain that bearish bias. So I think I did open up my oil chart. So let's take a look at oil right now, which is the West Texas crude oil. Very quickly. So the West Texas crude oil continues to remain lackluster. So it managed to drop as expected, in line with the negative momentum on the broad-based US stock indices, and broke down below our support level at 58.70 that we have. And right now is en route towards 47.90 and as well as 56.80, which is the lower limit of this minor sideways range configuration that oil price has started to form on 17th of October over here. So with the negative price action that is being seen on the West Texas crude oil right now, I would have a much more tighter short-term pivotal resistance level from a risk management perspective. So I tighten it over here to this minor swing low, now turns into a critical near-term support level. So after the breakdown of it, you start to see a series of a steep decline that has taken shape since today's Asia session at 59.03. All right, 59.03. All right, so this level here. So this will be my Titan short-term pivotal. Okay, in fact, let's look at, okay, one second. Seems to me this will be a better level. Right, this will be a better congestion level. And if I were to do a Fibo retracement, okay, and that also coincides very closely with the golden ratio, which is much more important. All right, so I just use it slightly higher because graphically as well, it's much more significant. Right, so this will be my Titan short-term pivotal resistance level, 59.32, 59.32 ST pivot. Okay, let me do a tidy up for you guys. Okay, so this will be my normal resistance level. Okay, good. So all is good right now. Okay, so for West Texas oil, still maintain that bearish bias over here. So with that, I will have a Titan pivotal resistance for today. As long as any bounce didn't surpass this Titan pivotal resistance at 59.32, I will have a bearish bias for West Texas oil. Next near-term support level to watch 57.90. A breakdown below it will see the range support coming in, a minor range support coming in that has been in place since 17th of October at 56.80. Only a bullish breakout above 59.32 will negate this bearish bias view to see a squeeze up towards the top of the range at 60.40, maximum 61.30, 61.70, which also confluence with the 50-day moving average. All right, so that sum up the intraday technical outlook on all the broad-based cross asset classes. So before we go, let's have a quick look at the economic calendar. What are the key data to look out for today? So for today, data to look out for will be a slew of global S&P flash manufacturing and services PMI data. So before that, at 3 p.m. Singapore time, we have retail sales for UK that could influence the sterling pound rate and the sterling crosses rate over here. Pardon me, at 3 p.m. Singapore time, market is expecting a similar rate of 1.5% year on year for the month of October versus the similar the previous month of September, which is also at 1.5%. Increase. So then thereafter, we will see a slew of PMI data releases starting from 4:30 p.m. Germany. Then thereafter, the Eurozone one will be at 5 p.m. Then followed by 5:30 p.m. you have the UK manufacturing and services PMI flash data, and most importantly, market participant will be looking at the US one over here at 10:45 p.m. So given the fact that US one market will be focusing on the services PMI, so services PMI market expectation is almost the same at 54.6 from 54.8 that was previous printed in the previous month of October over here. So then with that, we also have a couple of Federal Reserve officials speaking before that. Fed Bar has spoken yesterday, so I don't think he would change much of his tune. So new officials speaking today that has not spoken yesterday will be Jefferson at 9:45 p.m. Singapore time, Fed Collins at 10 p.m. Singapore time, together with Fed Logan. All right, so that sum up the daily dose of market insight for today. So do be cautious over here, given the fact that the US stock market has now started to show technical deterioration. So with that, I'm Kelvin here signing off. I wish you all a great and restful weekend, and we shall speak again on Monday. Thank you.